Made simple, today we are talking about some current events going on right now in October of 2025. Before we get started, I was having a little bit of trickiness with my mic today, so I want to make sure that everyone is able to hear me well and the microphone doesn't have any problems. So if you're here live, please let me know that the mic is sounding good. And in the meantime, we'll get things started because we've got our disclaimer to go through. So today we're talking about the government shutdown and how the government shutdown affects the stock market. Really quick disclaimer. Today is meant to be about educational purposes and is not financial advice. We're going to talk about what has happened in the past during government shutdowns with the stock market, and that is not an idea of what will happen this year. Past results don't guarantee future performance, which is why I'm sharing the details of this webinar with you so we can all make more informed decisions together. One more disclaimer, because today is talking about something very current and something that is very involved in politics. My goal and our goal is not to pick one side or pick another. We're not here to say one group is bad and the other is good. Our goal is to talk about money, talk about what's going on, provide as many facts as we can, leave things at the facts, and then talk about how that impacts or could impact the stock market. So I please ask that we can stay focused on the investment and economic side of what's happening, not the political side. Alrighty. Let's get into it. We're going to talk today about government shutdowns, starting off with what a government shutdown actually is, which organizations are affected, how the shutdown affects economic data, how the stock market has reacted in the past to shutdowns, because this is not the first time this has happened, and then if we have enough data to say what will happen this year during the shutdown. Starting off, let's talk about the basics. What is a government shutdown? A government shutdown is something that happens when the United States government, goes on a little bit of a unplanned and unpaid vacation. So the US government is a huge multi-trillion-dollar thing. It is also the largest employer in the United States, with over 2.4 million employees across the country and across the world. In 2024, the US government spent $6.8 trillion, but only had a revenue of $4.9 trillion. This we often hear of as the government deficit. And it's kind of small, but there's a little bit of a breakdown over here on the right side. But the important part about all of this is not the deficit itself. Instead, it's what comes from it. There are always things that we need to spend money on. Those are our mandatory things. But there are also the discretionary things, the things that we want to be able to have and want to spend money on. And Congress, the House of Representatives and the Senate, are responsible for taking the idea of what we want to or don't want to spend money on and approving it for the upcoming year. The way that all this works is that every year the government follows the same few steps. First, they submit the president submits a budget in February. Then Congress, the House of Representatives and the Senate, agree on what the budget should be by April 15th. This is the big top level, how much money do you have in your wallet or how much are you willing to spend that year number. That's the total spending limit. But it doesn't actually say who gets the money. If we want to know who gets the money, we now need to look at something different. We get to see, or really the Congress approves what spending happens and who gets that spending through 12 different pieces of legislature, 12 bills called appropriations bills. I promise there won't be a test at the end of the day. The reason I'm going through all this is so that you understand exactly where are things getting hung up right now. So these 12 appropriation bills cover all of the different government agencies: the Department of Defense, the Department of Labor, the Department of Homeland Security, and more. It will include things like their budget, their spending, and any additions or cuts they want to make. For one of these bills to get passed, it needs to go first through the House with 50% approval, and then through the Senate with 50% approval. Or really, it's 60%. While it does just need a majority, there's a bunch of weird stuff that happens where one group can try and delay or put off making a decision, called filibustering. If we really just care about one number, let's say 60%. In order for it to pass Senate, it needs 60% approval. And their time limit, October 1st. So this entire process, an idea of what we want to spend gets approved by April 15th. Who gets that money has to be approved by October 1st. Well, what happens if we get to October 1st? We ask what's the decision, and we walk into the room, everyone's yelling, screaming, someone's hanging from the chandelier, and there's no decision. Well, if they don't agree on what these bills should be, and if they don't pass these bills by October 1st, the government shuts down. Seems like a very simple idea, right? Everyone just goes home and waits it out. But that's not exactly what happens. Any government organizations who have bills that have been passed or approved, they get to stay open. This is what's known as a limited shutdown. So any agencies without approved bills would get shut down. Well, right now, none of the 12 bills have been passed, which means the entire government is shut down. But what actually happens when the government shuts down? Or, better question, what doesn't happen? Let's look at both. Let's start off by talking about what does shut down when the government goes into a shutdown. Most federal employees don't go to work. They are what is called furloughed, or they get unpaid leave. They're asked to stay home, and they don't get paid until the shutdown ends. That means most government groups don't offer their services. If you want to go camping with the family for the weekend, the website you would go to actually make that reservation, they're shut down. If you need to go and open up a new Medicare or Medicaid insurance, that's going to be shut down. Many of the things we use the government for are currently not working. But that's not all employees. There are many government employees who are still required to work during the shutdown, but they're not paid. Instead, they're told, go work, we'll pay you after the government reopens. And then lastly, funding and grants to organizations, companies, and schools are stopped. That means if you are a part of a school that receives government federal funding, that's now not happening. If you're doing research that is funded by the government or a department of the government, that's now shut down. So what doesn't shut down? What keeps going on through this time? Well, thankfully, most of the really important things, and then some that might be important, might not be important, depending on your personal views. Not what I'm really going to get into, though. First, I think everyone wants their mail to be delivered on time. The United States Postal Service, USPS, continues to be open. Uniformed military. If you are a military member or a service member and you're active duty, you still are required to go to work, but you're not paid until the end of the government shutdown. Social Security and Medicare. If you receive any sort of payments from these groups, those are mandatory. You will continue to get those payments, but any new claims can't be made until the government reopens. Thankfully, air traffic control. If you are flying anywhere, air traffic control at major airports are, for the most part, still open. There are a few exceptions that have been happening in the past few days, notably Burbank Airport in Los Angeles. They didn't have anyone to work air traffic control there. So, for the most part though, air traffic control, airline safety, flight safety, that is all still open. And then there are other groups in the government that are typically exempt or left out. These could be normal things to be left out, or are just made exceptions this year. But some examples include 90% of the US Justice Department, which is 100% of the FBI, 95% of the Department of Homeland Security, which includes Immigration and Customs Enforcement, ICE. They are all still employed and are still working, but are not paid. And 60% of the Department of Defense. These are just a few examples of some of the agencies that have the most people still working. And then lastly, and in my opinion, one of the most silly, pay to Congress and the president. Congress still continues to get paid even if the government is shut down, as well as the president still continues to get paid during a government shutdown. Now, that is the politics and the government side of things. This isn't government made simple, this is sectors made simple. So let's talk a little bit about how what's going on right now affects investors. Well, thankfully, there's a lot of stuff that helps to minimize or reduce how much a government shutdown affects our economy. The stock market doesn't shut down. US government bonds and debt securities are still paid out, and the Federal Reserve does not shut down. We continue to have Federal Reserve meetings. The Federal Reserve and central banks continue to operate. There is no big changes at the top level of our economy. But that doesn't mean it's business as usual for the economy, because the Federal Reserve is one of the most important groups for managing the US economy, and they can't do that alone. The Federal Reserve needs economic data to help make informed decisions. And many of the places that they get that economic data from are government organizations, which are currently shut down. When it comes to economic data during shutdowns, a lot of it is impacted. So government shutdowns impact almost all of the groups that give investors and the Federal Reserve important economic data. For example, the Bureau of Labor Statistics, the BLS. There's only one employee currently working at the BLS. The acting commissioner, the head of the group, is the only one in the office. They're responsible for super important data releases like employment data and the unemployment rate, inflation data, PPI, and import and export prices. These are all extremely important reports that we're not getting. The other one is the BEA, or Bureau of Economic Analysis. This group is responsible for GDP, personal income and spending, and US trade data. And then finally, the US Census Bureau. They also have a hand in a lot of the major economic data releases that we get throughout the month. Right now, if we go to a website such as Trading Economics, we can actually go through and see what data releases are from what agencies. So for example, if we look at reports coming out this month, and I just sorted by the highest impact. ISM is a private group. Core inflation rate, Bureau of Labor Statistics. PPI month over month, Bureau of Labor Statistics. Retail sales, US Census Bureau. Housing starts, US Census Bureau. Building permits, US Census Bureau. Durable goods, US Census Bureau. Fed interest rate, again, they're still independent. They still do their thing. GDP growth, Bureau of Economic Analysis. Most, if not all, of the most important data pieces that we get and are coming up are all from government organizations. And as long as the government is shut down, those data releases aren't happening. So why? Why is the government shut down? Is it because someone wanted to do this? Is it because we just got unlucky? Well, this is kind of where I have to give you a less than complete answer. Because there's a lot of information out there about why the government is shut down. And there's a lot of wrong information or disinformation about why the government is shut down right now. I am not here to comment on what I do and don't think is correct information. My goal is not to be a political commentator. So we're going to avoid the specific details or finger pointing or saying who is responsible for what, because those can be really difficult to verify or be 100% confident in. So instead, I'm just going to talk about what the facts are and leave the rest to your own opinion and research. Right now, the conversation is around mostly healthcare. It is around the idea of Medicaid and decreasing spending to Medicaid, cuts to government agencies such as Health and Human Services, HHS, and the Center for Disease Control, CDC. And then finally, talking about tax credits, helping to reduce costs that people pay for health insurance. Those are the big things that everyone is talking about. And both sides are keeping all 12 of the appropriation bills in a waiting period until those issues are resolved. Now you might be thinking, all of these just seem related to healthcare. Why can't we just approve all the others and leave healthcare up for conversation? Well, I wish it was that easy. Everything is all about, if I give you this, I'm going to take that. And leaving all 12 of them open for conversation gives both sides more ability to negotiate, to offer one thing in exchange for another. Or it means that if the government is completely shut down, there's more pressure to make it reopen. What you do with that information, how far you go, who you decide to say you support or don't support, is beyond what I really want to get into today, or really ever. But the impact of what is going on doesn't change, because right now, all 12 bills have passed the House, but have not passed the Senate. And right now, they only have 54 of the 60 votes that they need. So it doesn't matter if you agree or disagree on whether the government should be shut down right now or not. The government is shut down, and as investors, we need to figure out what to do with it. So to try and figure out what we do with it, let's see what's happened in the past, because this isn't our first time in a government shutdown. This is something that news organizations love talking about because it gives them something to talk about for days. Prior to this year, there have been 14 government shutdowns since the 1980s. Most of them last 1 to 3 days. But there are 3 that are much, much longer. In 2013, the government shut down for 16 days because the Republicans that held the majority at the time wanted to try and cut funding to the Affordable Care Act, or Obamacare. In 1995, the government shut down under President Clinton for 21 days because Clinton vetoed or said no to a bill that the Republicans approved, which would have increased Medicare costs to people that use Medicare, supported healthcare. And then the last one, and the longest one by a significant margin, in 2018, the government shut down for 35 days when Trump vetoed and said he would not approve any appropriation bill that didn't include funding to the tune of $6 billion for a stronger, bigger border wall between the US and Mexico. It should be noted that of all of these periods, the government has been shut down for 100 days total. So 16 days, 21 days, and especially 35 days is incredibly long. 35 days is over 1/3 of the total amount of time the government has ever been shut down. So that's a lot. And there's a lot that can happen in those 35 days to the government, to our economy, but how about the stock market? Because the government's over here, the economy is somewhere here, and then the stock market's over there doing its own thing. So what did the stock market do? Did the stock market care? Well, unfortunately, it's really hard to say. We can't really go up and say, well, on average, this, and this. Because the government's only been shut down for longer than 3 days 3 times. Maybe 4. I forget if there was a period of 5 days that the government was shut down. But there were 3 that were well above 5 days. So that doesn't really give us a lot of confidence to say, here's what we can expect in the market this week and next week and however long this government shutdown lasts. But here's what's happened. Going from oldest to newest, in 1995, when the government shut down under Clinton, the S&P 500 went up by 0.34%, or an average of 0.02% a day. Okay. In 2013, the S&P 500 went up by 2.3%, or 0.14% a day. And then finally, 2018, the S&P 500 went up by 13.4%, or an average of 0.38% per day. So, what that means is that it's not that the stock market doesn't care, but the stock market doesn't really care. Because really, we're seeing positive returns across all 3 shutdowns. This isn't something where the market just panics the minute this happens, the market collapses, and as investors, we need to be panicked and worried about the government shutdown and how it's impacting our... No. The market hasn't really cared in the past. Now, I do feel like it's worth mentioning that if we go and we look at something like stock charts, and we go to seasonality, which is under charts and tools, if we look at something like the S&P 500, October has historically been a pretty good month for the market. Over the past 20 years, 60% of the time it's gone up with an average gain of 1%. Historically, October and November are two of the best months for the stock market. So really, this is a bit above average, but is not anything crazy. So what's happening so far this year? The government's been shut down now almost 7 days, meaning we are now in the top 5 largest government shutdowns. And the market couldn't care less. It's currently up 0.9%, or an average of 0.15% a day. So is that it? Is that all we need to think about? Is we're done? In my opinion, no. I don't think we're done with this conversation just yet. And here we start to get into my analysis and a little bit of my opinion of why I feel like things could change. Right now, investors are focused on economic data. We are thinking about and considering the Federal Reserve and interest rate changes. A great example of that would be if we go and look at the stock chart from a day that the Federal Reserve met. The most recent Federal Reserve meeting was on September 16th and ended on September 17th. So let's go and look at a stock chart from September 17th. I promise I'll bring the screen over right now. Okay. If we go here and we get rid of all of this strategy stuff, I'm going to go back in time to the 17th. And I want to look here at 30-minute bars. So here we have September 17th. The stock market, prior to Jerome Powell, the head of the FOMC, talking, the market was kind of moving, but not really. It was pretty calm. And if we go even more detailed to like something like 5-minute bars, things will get even more, let's go 15-minute. That way it all fits in one chart. So this is September 26th. We've got to go back to the 17th. You're already starting to see what I'm getting at here. Now we have September 17th. Market was pretty chill. Not a lot happening. Jerome Powell spoke at 11 a.m. Pacific time, 2 p.m. Eastern time. Immediately, the market had massive swings. Dropped, went up, dropped. And if you look at the size of the tails, some of these tails are absolutely huge. We're seeing here, this tail is 0.32%. The entire range was, I grab the ruler again. This entire bar, in 15 minutes, the stock's price went up and down a total amount of 0.6% in 15 minutes. The next bar, it had a range of 0.5%. The next bar over, 0.6%. The next bar over, 0.5%. The stock market had a significant reaction to the economic announcements that the FOMC and the Federal Reserve had. So this really does show us that right now investors are caring about what the Federal Reserve is saying and where they see the economy going. So, what we're kind of seeing right now is that investors do care a lot about economic data. But more importantly, they care about the Federal Reserve and how the Federal Reserve sees that economic data. Now, this is the closest I'll get to something political. There are some people that are not a fan of the Federal Reserve and blame the Federal Reserve and their slow response to lower interest rates as part of the reason why the economy can be seen as slowing down. Whether you agree it's slowing down or not, different story. But some economic data is showing that unemployment is going up, people are losing jobs, and people are looking for someone to blame, and the Federal Reserve is one of those groups that is being blamed. The Federal Reserve, they're not a political group. They are meant to be independent and apolitical. They don't pick a side. They have been saying that part of the reason that they did not lower interest rates sooner is because of the uncertainty of tariffs. Tariffs historically have resulted in higher inflation. Lowering interest rates would result in higher inflation. So the Federal Reserve didn't want to lower interest rates right away because they were worried about if they lowered rates and tariffs caused a rise in inflation, we would see inflation jump up to 6 to 8% or higher. So the Federal Reserve defends their slow approach because of tariffs, whereas the current administration and many critics are blaming the Federal Reserve for keeping rates high to make the economy look worse, or were just slow to react, regardless of if they did it on purpose or not. The more important thing, though, is that the Federal Reserve right now feels that there are 1 to 2 more rate cuts this year. But they care about what's happening. They want to be able to change something, watch what happens. Change something, watch what happens. But it's a little hard to do that when economic data from important government organizations like the BLS and the BEA are shut down. The BLS was supposed to release a jobs report last week. There was no jobs report because the organization is shut down. So during a government shutdown, if these important economic groups are not giving us data, that means that the Fed doesn't have important information that they need to make a decision about federal interest rates. So to kind of dive into the analysis here a little bit more, qualitative, not quantitative, if you care, the Federal Reserve wants to figure out if they should lower rates more. To make that decision, they're going to use economic data, but because of the government shutdown, economic data isn't happening. Investors might not directly care about the economic data, but they do care about the Fed. And if the Fed is waiting for economic data, investors are stuck waiting too. So I'm going to walk you through a couple of the economic data pieces that we're going to be missing while the government is shut down, and where possible, share with you a this is good enough solution. First, we have jobs data and unemployment. This, we can get data from ADP Research, which is a payroll provider, and their data is pretty darn good, but it does exclude government jobs, and unfortunately, it can also change quite a bit. For example, if we go back and we look at the most recent ADP jobs report, originally, their first estimate for September was a gain of 50,000 jobs. Then that change was updated on October 1st to a loss of 32,000 jobs. So that's a pretty big difference, from 50,000 positive to a loss of 32,000. So this is a little bit of a tricky number because it might not be 100% correct, and it could be updated to be something wildly different. But that is a source of jobs data, while we're missing the BLS's data on unemployment and non-farm payrolls. In the place of the PPI, or Producer Price Index, which is how much does stuff cost for US manufacturers and producers to purchase. Typically, PPI is seen as a leading indicator of inflation, which means before inflation goes up, we will likely see PPI go up. The reason is that inflation is what people like you and me have to pay. If the company that we're buying a shoe from, if their PPI, if their cost goes up by 10%, their cost will go up by 10% to make that shoe. They make the shoe, they realize the cost is more, and they increase the cost for you and me by 10 to 15%. So we'll typically see PPI go up before inflation. But PPI isn't going to happen. So in its place, we could use S&P Global's Purchasing Managers Index, or PMI. PMI is released in a couple of different parts. There's services, there's manufacturing, and then there's composite, both of them put together. And the next composite release is going to be on October 24th. It is not seen as a 3-star here, it is 4-star. So we get composite, manufacturing, and services on October 24th. The next one, consumer data. After all, the economy is only as strong as people like you and me are willing to participate in it. If we want to spend more money in the economy, that's a good thing. If we want to spend less money in the economy, that's a bad thing. So obviously, learning a little bit more about how we feel is a pretty big value. And for that, we have the University of Michigan's Consumer Sentiment Survey. The next report for that is going to be on October 10th, this upcoming Friday. These data sources are not released by the government. They could be similar, but they could be different than the normal government data we get. But there's one piece of very, very important economic data that there isn't really a free or publicly available replacement. Inflation. If you were to ask someone, what do you think of when you think of the economy? They're going to tell you two things. Do I have a job? Unemployment. And how much do I have to pay to buy the stuff I want and need? Inflation. Job data and unemployment, we have some information from ADP. But for inflation, people like you and me don't really have a good alternative. We have two major releases of inflation data. We have CPI inflation, and we have PCE inflation. CPI will be next Wednesday, October 15th, but that comes from the US Bureau of Labor Statistics, BLS. They're shut down. At the end of the month, we get PCE inflation, or personal consumption expenditure. This one from the BEA, guess what? They're also on unpaid vacation. Vacation is probably not the right word. They're also currently shut down. So both of the most important indicators that we have for inflation are not open. We are not getting those updates, which means the Federal Reserve isn't getting those updates. So that to me is the biggest risk at the moment. It's the fact that we don't have important economic data that the powers that direct our economy need to make smart decisions. And right now, they want to make decisions because all eyes are on them. And they can't do that if they don't know all of the facts. So, what about earnings? Everything we've talked about so far has been about the economy. And without much forward-looking data, information to say what is happening right now in October 2025 or what happened in September of 2025, investors are going to want something. And they're going to look at the companies and the company earnings to give us that something. Quarter 3 for 2025 ended in September, which means that we are entering earnings season for quarter 3, 2025. It depends on how long the government shutdown lasts, but the longer it goes on, in my opinion, the more these earnings could matter and have significant swings in a company's price. Something that we have to remember, investors don't really think short term. Sure, they'll make money trading options or buying things for short-term swing trades, but the value that we give a company's share price is based on what we think it could be worth in the future. Take, for example, AMD. AMD yesterday announced a big deal with OpenAI, the company responsible for ChatGPT. Their share price jumped 24% in a single day. It's not that all of a sudden the company was making 24% more money. It's that their future value changed. And that future value is now worth a lot more. So, in reality, do investors care about what's going to happen with economic data in the next 2 weeks? Probably not. But what we do care about is what is going to happen long term, over the next few years, maybe even the next few months. And whether or not the Federal Reserve changes their interest rates, yeah, that's going to matter a lot. But what's happening right now with companies is also really going to matter. Everyone is talking about tariffs. Everyone is talking about what impact tariffs are having on these companies. And everyone's talking about what's going to happen next. Do companies think they're going to make less money in the near future because of tariffs? And quarter 3 earnings are going to do that. Quarter 3 earnings are a way for investors to learn what happened between the months of July, August, and September, and what do these companies think will happen in the coming months and year. We have a ton of earnings coming up in the next few weeks, and depending on how long this government shutdown goes, it could mean that we're getting a good chunk of earnings before the government shutdown ends. So I wanted to highlight the number of company earnings that we'll have over the next few weeks. Next week, from October 13th to 17th, we will get quarter 3 earnings for 35 of the S&P 500 companies. October 19th to 25th, 107 companies. And then you'll see it's ramping up. To celebrate Halloween from October 26th to November 1st, 182 companies. Over the next 3 weeks, almost 4 weeks, we will get earnings for over half of the S&P 500. Is an earnings report the same as economic data? No, it's not. But companies are going to be a good piece of information when we're missing others. Will a company tell us what the inflation rate is? No. But they'll tell us if we'll get to see, are people spending less money with that company? Is their revenue going down? Did their costs go up due to tariffs? How many of those earnings calls did they mention tariffs? How many of those earnings calls did they say, you thought we were going to make $1 per share profit next year? It's probably going to be less than that. That's guidance. So knowing what happens or what direction things are moving with earnings will always matter. But because we're missing other pieces of information like the BLS and BEA data, it's probably going to matter a lot more. Investors are going to assume a lot more based off of that earnings data. I want to summarize things briefly, and then I see one question I want to answer in the chat. And if you have any other questions or anything you want to look at together, super happy to do that as well. So the government shutdown has a very large effect on government employees and the services the government provides. But the stock market isn't directly affected. Historically, investors have not cared about the fact that the government is shut down itself. There's the government, then there's the economy, and then there's the stock market. But in my opinion, this year could be different. It is possible that we do see the stock market reacting more because we're missing important economic data. The Federal Reserve is missing important economic data. So with the Fed expecting more rate cuts this year, if they hold off and decide not to cut interest rates because of this missing data, the market's probably going to panic. If we see that the earnings for companies are worse than expected, I think companies are going to be punished for missing earnings more than they'll be rewarded for beating earnings. We saw something similar happen in 2022. And then finally, I believe that these earnings calls will matter a lot for providing more information about guidance. Where do these companies feel where do these companies feel their earnings and growth will be due to things like tariffs? Ultimately, tariffs are the big question mark right now. No one really knows the full impact of what they are doing. The reality of it is tariffs are something that will take months or years to see the benefits and the drawbacks too. So we are working not in the next few years or months. We invest in what's going on right now in the market. And what's going on right now is that we're waiting for news from the Fed. The market does react quite a bit to the news from the Fed. And if by the next meeting for the Fed on October 28th and 29th, no agreement is reached, we might see some pretty big changes in the market. Anna is asking a great question. Which sectors usually are the most impacted during a government shutdown? Great question. It kind of depends. Realistically, it would probably be healthcare, or at least right now it would be healthcare, because so much of the conversation has to do with healthcare. But unfortunately, data is a little thin on it because we don't have a ton of different data points to really say. For example, the data that I put together for you all today to say what was the average change, this wasn't data that I just found in research. Sorry, next slide. This is data that I had to go out and grab myself. So if you're curious to know what might be happening with healthcare, let me just see. I'm going to go into the spreadsheet that I used to make today's webinar By the way, welcome to the behind the scenes. There's no pretty dashboards or formatted numbers. It's just a bunch of raw text. We're going to replace the S&P 500 with XLV. So in 1995, we did not have XLV to work with, so we can't really do anything with that. In 2023, it went up by 3% for an average daily change of 0.2%. In 2018, it went up by 10.2%, or 0.3% overall. And so far, since the 1st of since the 1st of October, it's gone up by 0.53%. This isn't actually correct. So really, you would think that healthcare would be having the most moves due to what's happening because healthcare is so heavily affected, but it's really hard to know because of how much crazy stuff has been happening with healthcare in the past 2 weeks. Leading up to the government shutdown, healthcare went up 7.5%. That is unbelievably crazy for a defensive sector to go up 7.5% in a week and a half. So at this point, it's hard to really say if it went down, that it's going down because of these concerns versus it's going down because of any other cause. So we're a little limited based off of this only happens every so often. And it's really hard to say that there's a clear trend. But if we look instead at something like seasonality on stock charts, that also could give us a good idea. Because in my opinion, I think we are closer to seasonality changes, what sectors typically do and don't do best during October, than we are worried about which of these sectors does the best or the worst during economic shutdowns. So over the past 20 years, healthcare has gone up 55% of the time with an average gain of 0.6%. So nothing absolutely insane. In my opinion, we'll probably see seasonality matter a lot more. Same thing will go for other sectors like staples and discretionary. We're entering the holidays. People are going to be spending more on things like candy for Halloween, consumer goods and food produce things for Thanksgiving, and then, of course, Christmas and the gift-giving holidays as well. What trading strategies work best during this time, and should we expect higher volatility during this time? Great question. From my analysis, there is no increase in market volatility or no significant increase in market volatility during a period of time that we have a government shutdown. So I'm not really too concerned about market volatility spiking. If we look right now at VIX, it's 17.2%. It is going up currently. But I mean, we're slightly above the average in the past. But by no means is this anything crazy. The period of time where we were worried about Liberation Day tariffs, that was significantly worse. So really, as long as VIX is below 20, I'm not super worried about market volatility. So what trading strategies would work best? I don't think it really matters. I don't think the market is going to really care until we get closer to if the government's still shut down as we get closer towards the end of October, then I think we could see the market start to freak out a little bit. And as with any time the market goes down due to economy, sensitive sectors, discretionary technology communications will typically fall a little bit more than defensive sectors like healthcare, staples, utilities. Romulo, great question. Do I think the market, especially AI stocks, are overvalued right now? $1 million question, right? $1 trillion question in this case. It's really hard to know because there are only a few companies that do what these companies are doing. AMD produces graphics cards and computer processors, the two most important parts of any modern computer, especially a AI computer. Then there's NVIDIA that makes graphics cards and Intel that makes processors, computer processors. I think we could see some increase in competition because of Intel partnering with NVIDIA, OpenAI, ChatGPT partnering with AMD, but it won't really change the valuation of the AI market. All it will do is say there's more competition, so NVIDIA could lose some market share to AMD. So NVIDIA might go down, but we would see AMD go up. It's really, really hard to know. If you want to figure out some indication of just how overvalued it could be, let's look at something like price to earnings ratio. So we can go here to something like SOX. I can't remember if they give P&E. They probably don't, right? Because it's a fund. Yeah, of course not. So let's try this instead. We'll go to screener. We'll go to index, S&P 500. We'll go to sector, technology, industry. Hope you're following along, I hope. Kidding. Semiconductors. So this is going to include things like AMD, NVIDIA, and then others like Intel and Broadcom. So if we look here at their P&Es, AMD is 121, NVIDIA is 52, a bunch of other companies are somewhere in the range of 25, a couple lower. So yeah, 121 is really, really high, but for example, 52, that's not unbelievably insane. Like if we go and we look at like P&E ratio of S&P 500, right now the average is around 30, which is pretty darn high, but is not, oh my God, levels. But again, I do think that it is possible AI is a bubble, but I don't think that it's a bubble in the same way that the dot-com bubble was, mostly because the dot-com bubble burst because there was so many companies entering the digital world. It was so many companies that were getting millions and billions of dollars thrown at them just because it's the web. It's the internet. AI isn't really that. It's not the world where every small company with an idea can suddenly become the next ChatGPT. These companies needed billions of dollars to get off the ground. They still need billions of dollars. I don't see the need for AI ever going away. I don't see it being people are going to start throwing money at every AI company that emerges because it's all going to come down to the big people, the people that are making the hardware. And in reality, those are the public companies. OpenAI, they're not public. All of these developers of AI outside of like Google, Facebook, and Meta, for example, they are not publicly traded. So if more companies try and get involved in AI, all that means is that there's going to be more need to buy parts, processors, graphics cards. And that just means that companies like AMD and NVIDIA will continue to do better. They will have more sales. In my opinion, I don't think it's a bubble. I do think that it's a boom, and that boom could slow down and maybe lose a little bit of value. But I don't think it's a bubble that we're going to see a complete collapse like we saw with the NASDAQ and the technology sector after the dot-com bubble. Great question. But again, if someone knew the correct answer, if someone had a time machine, they would become the next billionaire. Like, there is a lot of money in knowing the correct answer to, is it a bubble? Is it overvalued? Is it undervalued even? No one knows. But seeing something like what happened with AMD yesterday gives us an indication that if investors do feel like there is more room for growth, apparently they thought there was room for 25% more growth in AMD. So, kind of interesting. But we'll leave things here for today. Thank you all so much for joining us for this wild topic of the government shutdown, the lack of historical context for what they really mean, but the understanding that the market doesn't really care if the government is shut down or not. They care mostly about what's happening with the market, and right now the market seems to be business as usual. All of that could change if the Federal Reserve meeting in late October is impacted, but until then, it seems to be business as usual, and if things start to change, you can rest assured that we'll be here to cover those changes. Thank you all so much for joining us today. I hope to see you all back for SM Espanol this Thursday and another Sectors Made Simple English webinar next Tuesday. Take care.